This is the briefing for Friday, May 24th. In Wednesday's briefing, I talked about the fact that NVDA earnings were coming out, and that would be a major news event that could have an impact on the performance of the stock indices. As it turned out, NVIDIA, of course, blew their earnings out and has a projected 10-for-1 stock split. So when I talked about that, I talked about the potential for what would happen in the next day. And of course, one of the probably higher probabilities was the fact that NVIDIA would probably cause the rest of the market to go higher. And in that briefing, I talked about watching for a couple things. One was a divergence in the internals, which could occur on higher prices that would suggest the potential the other indices were not going to follow along, and or the fact that there would be no follow-through. And I pointed out the fact that I use a 15-minute chart. These are 15-minute charts of the spiders and the Qs, and that if there's no follow-through, to use caution. Well, you can see this is the open on Wednesday, and on Thursday, and then of course we got this rotation back down. There was no follow-through, which suggested the potential that something else was going on. We got a pause, and then of course a selling that came in throughout the day, going into a low. Now we blew in the spiders. We blew through this 527 short-term support, and then paused and bounced off of long-term support, which is at 525, and I'll get to that in a minute. The same thing occurred with the Qs. There was no follow-through to the first 15-minute candle, and then of course we blew through short-term support. Did not quite test the 450 area, which is long-term support. And then, of course, spent the rest of the day rotating up. And then, of course, today we had this rotation up as well. Now, in yesterday's briefing, I talked about the fact that we had reached a point of being extremely oversold. So you can see right here, this is the NYSE. This is yesterday. We were at extreme oversold condition. This is the NASDAQ. And that we had to expect some type of a pause. And in that pause, I suggested that if we opened lower and there was a divergence in the internals, especially with breadth, to expect some type of move back to the upside or a pause. If we opened up higher and did not have much price development, that would then suggest that the pause had started and that we would spend potentially today and Tuesday, markets are closed on Monday, working off this oversold condition, and then potentially we could see whether we were going to see another leg to the downside or whether this was just a one-time event and we would see a continuation of the move higher. Now, important to this is the fact that volume is still collapsing. Now, we're coming into a 3-day weekend. Volume ticked up yesterday in the sell-off, but we're coming into a 3-day weekend. So typically, a lot of traders and investors will take off and early on Friday. So that probably resulted in why we saw a down day in volume today. 52-week highs minus 52-week lows were declining, and you can see the divergence in market breadth. Now, breadth recovered somewhat today, which is typical, but you can see there was not much price development even in light of the strong breadth reading. Now, the same thing occurred in the Qs. You can see the divergence in volume, tick up in volume yesterday on the sell-off, and then of course volume down today, which I equate to basically the fact that we're at a 3-day weekend, divergence in market breadth, and then of course recovering in today's trading. And in the IWM, we have basically the same thing, volume falling off and breadth falling off going into these highs. Now, we have an intermarket divergence. You can see the Qs are a little bit stronger, the Russell's showing a little bit more weakness, Qs showing a little more strength in terms of holding above this support level, and the spiders basically holding just above it also, but not as high as in the Qs. So what we're looking for potentially in Tuesday's trading is the fact that we could see an additional move higher based on the fact that we're not at an extreme overbought reading yet. But if we start down, we need to be careful, mainly because the internals, if they continue to strengthen the way they did in today's trading, especially with breadth, then that's going to suggest that this was just a one-day hiccup testing lower support and we're going to see, should say, lower long-term support, and we're going to see another continuation of the move higher. It was important that 525 held and that 450 held in the Qs. So what's going to be most important is what happens with the internals on any higher prices, especially with volume. Volume is absolutely collapsing. This is volume in the spiders and volume in the Qs as well, absolutely collapsing. So while we eliminated almost all of these divergences in breadth in today's trading, you can see that there was not much price appreciation based on the breadth readings. So what happens on Tuesday is going to be very, very important for the longer term development of this market. In terms of total volume, you can see, look at the trend. This is NYSE volume. Look at the trend in volume. Once again, I have to give a little bit of consideration to the fact that we're in front of a 3-day weekend with volume here. And then, of course, while NASDAQ volume is above average volume, you can see that it was even down in today's trading at all. Also, it ticked up in yesterday's trading on the sell-off, but it is down as well. Now, also looking at where we are in terms of the percentage of stocks above the 50 and 200-day moving averages, you can see the divergence here. This is above the 50-day moving 50-period moving average for the spiders for the S&P 500. This is the 200-day moving average for the S&P 500, and you can see how the divergence, how price is moving higher, but the percentage of stocks above their 50 and 200-day moving averages is declining. Same thing occurred in the NASDAQ. This is NASDAQ above their 50-day moving average and above the 200-day moving average, and the Russell is doing the same thing. The percentage of stocks above the 50-day moving average and the percentage of stocks above the 200-day moving average. So the real key to here, and what is very, very concerning, is what's happening with the internals, especially on this part of this move. You can see that volume was just absolutely, this is about as low, I think, we've seen it in a very long time, going all the way back to November 24th, which is, I believe it was Thanksgiving holiday. And of course, what's happening with market breadth also. So unless the internals strengthen, this market is in jeopardy. So we really, on any higher prices, we really need to see the internals begin to increase. I really thought with the blowout earnings for NVIDIA that we would see the internals for the market strengthen to support this rally, but so far it hasn't happened. So have a great 3-day weekend, have a great Memorial Day, and I'll pick this back up on Tuesday.